love talking to Jim Johnson, who's the CEO of Hunting. Jim, well, it's kind of like, I don't necessarily just want to talk about oil, but having said that, it's still the bulk of the revenues, yeah?
It is, yes.
And that huge Q80 order as well. It's still proving the grassroots or the foundation for everything else you want to become as well.
Correct. And thanks for having me on again.
You're always welcome.
No, it's been a good first half for us, and it really shows the diversity of our product offering, all the things we can do. We set out a year ago in September our 2030 strategy with our first Capital Markets Day. And there we outlined where we want to grow, segments that we really wanted to separate ourselves from being just considered a U.S. land-based supplier. And I think the results that we just showed at this period really validate that, with things like the Kuwait order, with this big growth we've seen in our subsea business, up 83% year over year. Our advanced manufacturing business, like our Dearborn operation, we talked about making the space components and aerospace, up 10% year over year. So I think even in a very difficult U.S. land market, we've shown that we can perform
I'll talk about subsea to space in a moment, because it just galvanizes everyone's excitement as well. You know, subsea to space. I mean, who can't be excited by that? But I do want to talk more about energy as well. Look, you don't want to be seen as just a land-based supplier into the oil services industry or the oil industry as well. But you're not the only one as well. When I last spoke to Schlumberger, I was in the Middle East. I'm pretty sure last time I spoke to Baker Hughes, I was in the Middle East as well. So everyone's looking for those markets. The energy transition appears to be, to the uncultured eye, a bit bumpier than it was for many, i.e. hydrocarbons appear to be back in some way, shape or form. They never left in the Middle East as well. Right. Is that still a great font and a great of growth and a great part of your 2030 strategy?
We would like it to be, but you're correct in everything that you said. Our focus on the energy transition has really been on geothermal and carbon capture. On geothermal, we are seeing traction right now, but there's a lot of sticker shock out there with the operators trying to put projects together. We had one, for example, big tender in California, and the project actually came in once all the work bids came in. It was $1 billion over plan. Wow. So time out on that. On the carbon capture side, it's really very, very slow. And a lot of that is back to permitting issues, pipeline issues. How do we make money in this, that whole bit? So I'm less bullish on the carbon capture side. Let me just have a time.
I know that there are different views of the administration and its attitude to energy as well. And obviously it becomes a big political hot potato, rightly or wrongly, and we can discuss it on air if we want a bit later. But to see the same old issues under a Democrat administration that have been the criticism under various administrations, permitting and regulation still as tough an issue as ever.
It is.
It sounds as bad as Europe. Now, I thought the US was better than us.
There's just so many overlapping agencies. It's not like you can go one place and get a decision, right? You have state issues, you have federal issues. And then again, like with carbon capture, it's how do we actually make money on this, right? It sounds good, but where is the cost per ton?
You make money from economies of scale and getting widespread adoption because everything gets cheaper on that as well. Right. Well, I mean, that's your industry telling me. Right. That's me just parroting it back again as well. But there needs to be a lot of money pumped into this before it shows any profit. The problem is who's going to do it.
Correct. You hit the nail on the head.
Let's talk about that order book, as you saw that Kuwaiti deal as well and the like as well, but also just your energy equipment services, all of that part. What's the runway looking like then for you?
Well, we ended up the first half at a record order book number of around $700 million. Yeah. So in my years with the company, we've never ever approached anything like that. A lot of that is based on Kuwait, a lot of that's based on the subsea. We made another announcement this morning about the success of our organic oil recovery, so that doesn't include the $60 million we just picked up with that. So we're very confident going into 25 that if you look at that $700 million backlog, about $400 million of it will go this year. And a lot of our businesses, like our Titan perforating business, there really is no backlog, so it's very short cycle. So we're pretty confident that next year is going to be another good year and another step of advancing in our goals for our 2030 strategy.
It's also an important industry in which you kind of need to keep costs down. How much further cost reduction are you looking at, if any at all, in terms of staff reductions? I mean, you've had that in the past as well. Are you at any play in that?
I think we're okay right now on costing. What I would say on that is we spend a lot of time focusing on lean manufacturing within our organization. So it's a never-ending process. For us, it's the same as the oil companies. When they say we need to keep drilling wells faster, 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 we do the same thing. We have taken some cost out of the business recently with some consolidation we did on our Titan business, which is the U.S. land perforating business. But overall, our cost basis is good. We're a very efficient operator. We've got lots of irons in the fire for growth as well. I mean, one of the things I like to highlight is our India joint venture, which has really kicked into high gear right now. So, we're focusing on the top line, but our eye remains on making sure we're cost effective.
I actually wanted to talk about the U.S. headwinds, but now that you've also spoken about India, I think that's very interesting because to some that's seen as a different growth area to the demand that you kind of see and the kind of growth you were seeing out of China. How much out of that are you seeing then, particularly out of India, and can that sort of take over what you see from the States, especially your Titan business there?
No, I don't think it'll take over. I mean, the U.S. is in Canada. I mean, hats off to our Canadian team that has done a great job in the past year. That is the biggest oilfield service market in the world. So India will never be at those levels or even close. But it is a very growing market because of the energy demands and the need to have in-country sourcing for manufacturing. Our upside in India is we have a great partner with the Jindal Group, who's very well known within India. They have a seamless mill which we're attached to, and it's how we're in that market. And today 100% of everything we do in India is staying in India. So it's not being exported.
Jim, whoever came up with the subsea to space tagline, I don't know if it was you or one of your team.
Wasn't me, it was one of our other guys.
Oh, well, I can blow a bit of it. I mean, it's a fantastic, because straight away it makes me think, oh, space. Right. Space, this is exciting. And you have done a bit of work with Musk's team, and that, but you've also done work with other players in that exciting area. I mean, it is exciting for all of us. Who can't be excited by space? But is it turning into profitable growth for you?
It is profitable, but it's slow and it's a small portion of our business. So our advanced manufacturing business, the aerospace side, really the biggest components are people like Pratt & Whitney and General Dynamics. Mm-hmm. So we're making components for Sikorsky helicopters. We're making various different jet engine parts and things like that. But it's one of those areas that we have an impact on. We see it as being a growth area. People have validated our quality and the way we do our business. So we will continue to have, I think, more opportunities in that going forward.
And just in terms of the business model as well, I mean, again, it's look, you've got SpaceX who are taking on a greater bulk of the traditional NASA in-house work as well. From the other people you're trading with, doing as well, is it still just rich men's folly or rich men's kind of hobbies, or is it actually going to be something you think can actually have some form of exponential growth at some stage?
Yeah, I think this is a real deal. I think Elon Musk has shown with his satellite business, all the launches that they've had, that this is going to be a continued growth business for that sector. And we're very happy and pleased to be playing a part of that.
Yeah. Let's go back to where we started. That you wanted to be seen something other than a land oil field services supporting company, what have you. Obviously that's been very successful. The shares have had a very good rally over the last 12 months as well. But in terms of your valuation compared with peers, are you happy with where you trade compared with some of those US peers who are still seen as those kind of companies?
I think I'm never happy, right? That's my job, to keep pushing that and make it higher. But I think we have improved on our multiples, and I think that's because the story of the diversification has come out. Many of our peers are strictly U.S. land and have an issue with how do you get margins up, how do you grow sales in a flat marketplace. So I'm really relatively happy now. I'm also positive more on the UK market than I was a year ago. So I think because our story is clear, there's very few options to play oilfield services in the UK outside of hunting.
So you've kind of led me down a path without knowing it, to asking why you're not a big target. Because if I was one of those pure play US oil services groups who saw you with a foot in many camps, including, I'd say, well, I can buy the likes of Hunting, I can create synergies in my domestic US operations, plus I can buy myself growth in potentially exciting areas, albeit small, such as space, and indeed I get myself a niche into other areas where I haven't got a footing as well. Right. Are you in play? Have you been spoken to?
No, we haven't been spoken to, and to the best of my knowledge, we're not in play.
No.
I think that right now, on the M&A front for oilfield services, it really hasn't played out that successfully for those that have done it recently. If you look at Schlumberger with the Champion X acquisition, that did not play very, very well from a
and yet the majors are working very hard to shore up their domestic position and pick up as much around Permian and elsewhere as they can.
Right, and that is that's also one of the issues, I think, putting a lid on activity in the U.S. has been this big land grab in the last year by the Devons and the Conocos and the Exxons, you know, with the consolidation going on. But I think from an oilfield service, I mean, Patterson's another one that acquired Nextier, acquired a company called Altera, really hasn't done anything for their share price.
That's really fascinating. Why are these deals not making sense? Why are they not having the execution that the predators would have liked?
Yeah, I think they do make sense in the midterm, but short term, everybody's too focused on natural gas being under $2 an MCF and a rig count below 600 and completion counts down.
Yeah, that's fascinating. Did you want to come in?
I just wanted to ask the rest of the organic growth that you might see. I mean, you've been speaking about the diverse portfolio that you pretty much have as well, and just the diversity and growth. Is that for you then going to come in by way of any further acquisitions? Because as you've just been spoken about, those deals sometimes won't work in the short term, but medium to long could.
Yeah, we're very pro-acquisition. We would love to do some acquisitions. We look at something literally every month. It's just it's been difficult finding something that made sense, and it's difficult just matching buyers and sellers on a price point and that makes sense with synergies and the like.
Yeah, it's tough.
I don't know how you would feel. Well, a lot of CEOs will just clam up when I ask this next question. But in fact, I got in a lot of trouble with a massive US CEO when I asked this question one cycle ago. And the question is, change of administration, well, we're going to have a different president regardless as well. I don't believe the rhetoric that Democrats bad for hydrocarbons, Republicans good for hydrocarbons, and the evidence is there to back me up when I see that we have record US oil production pretty much, give or take, and we're under a Democrat administration as well. And I know for a fact from other senior members of the energy community in the States that actually they've got on perfectly well with the Democrat administration as well. Do you have any concerns about the political environment stateside and what that means for, again, that land-based production going forward?
I don't. I agree with you. We had supposedly the most unfriendly oil administration, and we got 13 million barrels plus a day of production in the U.S. They've opened up some areas in Alaska. I think that a Republican administration would be more positive for the Gulf of Mexico. That's the one area where I see a difference. But overall, I don't think a Republican administration is going to be the drill baby drill again, because the operators, my customers, are focused on generating cash, making money, and they're not going to do it if oil prices are low.
And this just goes back to one of your other answers. Still got regulatory and permitting problems at a state level. Forget about what the federal government allows you to do on their level. Love the conversation.
Great.
Thank you. We've covered a lot of ground. Jim,
Thanks
always nice
a lot.
to see you, and we learned something.
Appreciate
Jim
it.
Johnson, CEO of Hunting.